Hello guys and welcome back to this channel. In today's video, I am going to talk about supply and demand flips. It is important to know those terms because they will help you find valid zones. Here we have a bullish structure. The change of trend appeared at the moment of breaking this lower high. Let's follow the price. It is approaching the supply zone. This is valid because it causes the breakup structure of this low. So, as you can see on the chart, imbalance and liquidity are also present. Be careful, do not forget that we are still in an upward trend. So, let's see how the price reacts. Well, this zone becomes invalid, which indicates the continuation of the movement. For a better understanding of this video, I'll explain it through a drawing followed by some examples on the chart. Here we have a supply zone where the price had a reaction. After its invalidation, the price returns to the demand zone and continues the movement. This concept worked because there was a first reaction that was controlled by the supply. If the price went directly through this point, we wouldn't have the certainty that the market would have continued to move here and could have rejected from other zones of demand. If we implement this concept, we have a first reaction here. We have a valid demand zone at this point, and the price may continue to move as in our drawing. So the market creates a new high. This is the last structural point liquidated. The price continuing the movement from the demand zone. Let's see if the price will respect this point as well. As you can see, the zone is completely invalidated, but we have one reaction here and another here, which indicates that we can use the concept presented earlier, only this time in a bearish structure. The trend is changing direction after the liquidation of this low. There is also a valid supply zone from which we expect the price to react. This area is still valid because the breakup structure has not yet occurred. If you remember from the previous video, this move is a liquidity sweep with the role of taking orders from the support area. Liquidity is created inside the supply zone as a resistance traded by the retail traders, which indicates that we can expect an impulsive move to take over this liquidity. As I said, liquidity is taken over, and now we are looking for a sell position on a lower time frame, for example 15 minutes. The price is still within the 4-hour supply zone. We are waiting for a break of structure to find an entry. Liquidation of this low will bring a confirmation to be able to set a sell order. Liquidation occurs and leaves behind this supply area. We set the entrance with the stop loss over 1 pip. The first is in this area of demand because the price can have a reaction, and from the point of view of the structure, we will put the final target in the low of 4 hours. Let's see if the entry is hit. And as you can see, it is hit. After liquidating this low, we put a break even. Liquidation occurs and the transaction will run with a risk of 0. Let's go for a longer time frame for a faster replay of the price. Here we see that the first target is reached. We move the break-even at this point. Let's see the price action. The final target is reached with a risk reward of 1 to 38. Remember that the first target was at this point where I would have closed half of the transaction. Then I would have let the transaction run to take profit with the stop loss here. From this point of view, the gain is relative because we have to make partial profit throughout the transaction, not knowing where the market can jump directly into our stop loss. Don't forget to like, subscribe if you haven't done it yet, and if you have any question or concern about this field, I'm waiting for you in the comment section. I have a quote for you guys: small profits each day add up to big results. Have a wonderful week.